Whether this rally is on borrowed time or not, as earnings season gets underway on Friday and with the Fed apparently intent on raising interest rates a couple more times at least. Let's ask Dan Greenhaus, chief strategist and economist for Solus Alternative Asset Management here at Post 9, as you clearly saw a moment ago. Welcome. Nice to see you again.
Thank you, sir.
So you say, I'm looking at the notes, too many people are dismissing how concentrated the rally is. And I'm like, really? I mean, everybody's talking about how concentrated the rally is.
What I'm referring to is the bullish argument that not only 7 stocks are going up, which is undoubtedly true. Lots of stocks are going up. No one is saying...
Lately.
Sure, there's certainly been a catch-up with the small and mid-cap indices. We know that. My point is that the argument on the part of the bulls is it's not just 7 stocks going up. And my point, since I haven't been on a while, so I haven't been able to rant about anything in quite some time,
Let's go.
is no one's saying it's just those stocks, but they are disproportionately going up to a larger and faster degree than everyone else. They account for a disproportionate share of the gains. There's nothing new there, but
Is there something wrong there?
No, I don't think.
Does it matter?
No, I also simultaneously don't think it's necessarily a problem for the market. What I find is the argument being put forth that it's not just that. It is a nonsense argument to say it's not just 7 stocks going up. We agree with that.
Well, it's primarily been the Magnificent Seven.
They are doing the bulk of the work from an index weighting standpoint. We know that. And they are also up meaningfully more. So, like, the median stock in the top decile is up like 9% or something. Everyone else, give or take, is up, call it 4 or 5%. So there's much more work being done by the larger stocks. And I just don't like the argument being put forth that that's not something to which we should pay attention.
The argument aside, do you feel better or worse about the market making the turn for the second half because that has been the case for the first half?
Unquestionably better. I spent most of last year quite bearish. I spent most of this year less bearish. I don't want to say I've been bullish, but I think certainly when you see the type of action, the technicals in the market, it was hard not to get a little less bearish, if not bullish. And then on the back of that, you have the improving economic landscape and earnings possibilities in the back half of the year. When you put it all together, you should certainly have been at a minimum less bearish, if not bullish.
So are you more bullish today than you have been in, say, 18 months?
Well, yes, but a lot of that was done last year when the S&P is down 27% top to bottom, when you have the worst year in our lifetimes for investment-grade bonds, et cetera, et cetera. By definition, you should probably be getting a little more bearish if you're not in an 08 type crisis, which nobody and I don't think we are. But at the same time, I don't like the idea that price action dictates forward expectations, meaning you've had a good run here and we shouldn't dismiss it, but at the same time, you are still dealing with much of the same types of things that we've been worried about for the last 12 months, except now you're starting to see some of it happen. That's the slowing in the labor market. It's the slow deterioration in the consumer. General Mills told us the other day that they're starting to see a reduction in price elasticities, meaning people are getting a little concerned about price increases. So you're starting to see some of these things break through. And to be intellectually honest, the fact that it might be coming later than originally thought doesn't dismiss the fact that they are still happening.
So, do you think the risk reward is better or worse then? For stocks?
Right now, I think you should probably be staying long. If you have been long, you should probably stay long if you don't feel like you've been long enough. And again, I'm not speaking to what Solus is doing or not doing, but I think on balance, the technicals in the market are telling you.
If you're not speaking to it, who is?
Well, we're a hedge fund. I can't. There's all sorts of restrictions on what I can. But listen, the technicals in the market matter. They help guide the turn, and I think they help guide you now. But again, the problem that you run into is, unlike 6 months ago, you do have those sort of under the headline cracks, if you will, to which everybody should be paying very close attention.
Do you think there's going to be a catch-up trade in the second half from the things that lagged in the first that led people to suggest what got you all worked up?
I don't know if I was worked up, but yes.
Well, you said you were going to go on a rant. So,
yes.
I mean, one goes on a rant when they're worked up.